If we head into a precious metals bull market in 2024, note that I said if, not when, what will happen is that precious metals bull market will absolutely, positively be led by gold. I don't know why this is. I just know that it always is. And when the generalist money is attracted by the precious metals narrative, silver, perhaps because of its lower unit of exchange, unit value, will move further and will move faster. I own gold because I'm afraid it's going to do well. I own gold to preserve my wealth. I own silver as a speculator. I remember the extraordinary move in silver and silver equities in the 1970s. I remember a move in the metal from $1.50 to $50.
Spot silver emerges as notably bullish, concluding 2023, holding steady in the range of $24 to $24.60. This bullish sentiment aligns with the upward trajectory of silver demand since 2016, soaring from 979.7 million ounces to an estimated 1167 million ounces in 2023. The surge primarily springs from industrial demand, showing steadfast growth, while investment and jewelry demand exhibit more volatility. Forecasts confidently project this demand to surpass the 1,024.9 million ounces mark, highlighting robust fundamentals within the silver market. The bullish outlook persists as the global economy anticipates continued expansion despite looming recession concerns, indicating prospective growth for silver demand in 2024 and beyond. Rick Rule, the founder of Rule Investment Media, underscores the historical significance of physical silver as a valuable asset, particularly in South Asia and the Middle East, operating outside traditional governmental systems. However, accurately assessing privately held silver quantities in these regions remains challenging due to its decentralized nature. Contrary to expectations of a shortage, Rick highlights that most global silver supply doesn't primarily originate from fresh mining ventures. The Silver Institute reports a decline in silver mine production from its peak of 899.8 million ounces in 2016 to an estimated 842.1 million ounces in 2023. The global supply chain for silver faces vulnerabilities, including risks from natural disasters, geopolitical tensions, and pandemics, leading to production delays, scarcities, and increased expenses. Despite persistent shortages in silver supply over the years, this deficit hasn't resulted in the rapid gains anticipated by speculators. Uncertainty surrounding privately held silver quantities and the potential price triggers impacting the industry make predicting silver's future performance complex. Rick notes a trend in the precious metals market where increased interest, especially in gold, typically drives market rallies. However, due to its lower value per unit, silver might experience more pronounced and rapid fluctuations in response to market movements. We will present clips from Rick Rule's interview with Palisades Gold Radio, but before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
Simply the fact that physical silver has been used as a store of value, a non-governmental store of value, particularly in South Asia and the Middle East for a long time. And because that silver has been used outside of government systems, it's very difficult to understand, as an example, how much silver inventory exists in private hands in South Asia, and in the Middle East and North Africa. It's important to note, too, that too many people who believe in an imminent silver squeeze look in terms of supply at silver mine supply. It's very worthy to note that at best, new mine supply from silver mine accounts for 20% of global silver production. The rest coming from byproduct production and base metals, and from a very robust scrap and recycling market. One of the interesting things about solar has been thus far that silver is so cheap that a recycling market hasn't developed in the most part with regards to silver that has been used on solar panels. It's simply at $25 isn't economic in most applications to recover the silver from scrapped solar panels. It's important to note, too, that silver at this price is so cheap that the industry has very little incentive to develop a substitute for silver in various applications that require reflectivity And frankly, the ductile properties, the fact that you can spread silver so thinly and get a uniform reflective surface. The point of all this simply is that when you go through year after year after year of supply deficit, at the same time that silver speculators are getting more and more and more disappointed, that pop in silver that attracted them is getting closer to occurring. People want certainty. Unfortunately, with regards to silver, certainty is in short supply. Nobody really understands what the above ground inventory is because so much of it is privately and closely held. Nobody understands very much about the price points that will be necessary to encourage substitution should the silver price go up. The silver speculator, because, as an example, during the Reddit silver squeeze, had such high and immediate expectations, looks at this uncertainty, and they look at the lack of price movement, and they suggest to themselves that silver is dead. That's wrong. What is right is that their time expectations, their time preferences are not a fundamental. They're a personal preference. The precious metals narrative becomes established by gold, and the generalist money begins to come into the precious metal space because the population of silver stocks is so small, and because the price movements that are exhibited by the commodities that they produce is so great. The upside in silver stocks is simply mind-boggling when it occurs. Mm-hmm. If we head into a precious metals bull market in 2024, note that I said if, not when, what will happen is that precious metals bull market will absolutely, positively be led by gold. I don't know why this is. I just know that it always is. And when the generalist money is attracted by the precious metals narrative, silver, perhaps because of its lower unit of exchange, unit value, will move further and will move faster. And the silver equities, which we've discussed many times before on Palisade Radio, don't have the market cap to contain all of the generalist money that will come in the space.
Uranium prices have surged, surpassing the $80 per pound mark, marking a level not seen in over 15 years. This notable increase in uranium prices stems from a combination of factors, including a renewed interest in nuclear power and several disruptions in the global uranium market. Sprott Asset Management reported a substantial 55% rise in the value of physical uranium year to date. Stephen Schofstall, Director of ETF Product Management at Sprott, highlighted the importance of the current uranium incentive price range of $75 to $80, enabling producers to sustain profitability. Rick Rule also notes the significantly high current spot prices for uranium, which theoretically should encourage new production. However, initiating new production is a time-consuming process and not immediately achievable. In the short term, a structural deficit in uranium supply remains, indicating the potential for further price increases, although this outcome isn't assured. He underscores the importance of the term market in uranium transactions, providing both uranium buying utilities and selling miners with price certainty over an extended period, typically 5 to 10 years. Let's now return to the interview.
I need to say, with regards to the uranium equities in the very, very near term, the easy money's been made. That isn't what people want to hear. When the price of something triples, and when that price move justifies the narrative, people want to come into a story when it's comfortable. You make money coming into a story when it's uncomfortable. Mm-hmm. So the easy money has been made. Uranium and uranium stocks have gone from being despised, hated, to being liked. And that move is where the easy money has been made. The real money is going to be made now. Spot uranium prices, by the way, it's just on fire. Spot uranium prices at this price level are sufficient to incent new production, but they won't incent it right away. You have to discover this stuff. You have to finance this stuff. You have to permit this stuff. You have to develop it. I suspect that you won't see greenfield production, new production, come on to any important extent for 5 or 6 years, mm-hmm. which means that in the near term, while we still have a structural deficit in supply, that the uranium price can go higher. I'm not saying it will go higher. I'm just saying that it can go higher. What's important to note now is that much more of the uranium market, much more of the transactions take place on the term market than the spot market. And this is important. This gives both the utilities who are buying the uranium and the miners who are selling uranium at least some form of price certainty over the 5-year and 10-year time frame. This is important for the power plant developers because they're borrowing to build a new plant $5 billion. Mm-hmm. And the lender wants to make sure that they have access to enough uranium to amortize the loan. And they want some sense as to what price they'll pay for the uranium so that they can enter into power supply contracts, knowing something about the cost of generating the power. But this is much more important for the miner. The miner with 60 or 70% of her production, his or her production, in the term market means that they have price certainty with regards to their production. They're not subject to the tyranny of the overnight or spot market. And with this visibility, provided at least that the purchasing counterparty is of investment grade credit quality, Southern Company, Duke Power, China General Nuclear, somebody like that. What it means is that you can literally take the power purchase agreement, or pardon me, the uranium purchase agreement to the bank. Mm-hmm. And this visibility, this certainty with regards to at least the top line revenue means that deposits that 10 years ago wouldn't have been able to be financed can be financed today. That's going to be very important. You're going to see this.
Silver's rally paused at the triangle's upper limit, signaling a need to surpass $26 for sustained upward movement. Anticipated solid demand in 2024, driven by the Federal Reserve's rate cuts, might propel silver toward $30 upon breaching the $26 level, hinting at potential gains. Can silver's momentum sustain upwards amid anticipated solid demand in 2024? Share your observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.